Taiwan's stock market just lost 1,700 points in a single day. That's about $50 billion in market value wiped out before lunch. Here's the twist. TSMC, the most important company in the global chip supply chain, actually announced a massive investment boost the day before. So why did everything crash? Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. The TAIEX opened at 45,234 on July 17th, then fell like a rock to a low of 43,866, testing that critical 120-day moving average around 43,545. Volume was huge, with an estimated full-day turnover of 1.17 trillion new Taiwan dollars. That's over $36 billion changing hands. Now here's the head-scratcher. On July 16th, TSMC announced it's raising its 2026 capex to $60 to $64 billion. That's 15% above its prior midpoint. They also revealed an additional $100 billion investment in Arizona, which could mean 4 or more new fabs there. On top of that, TSMC's CoPoS advanced packaging trial line is under construction. About a year from maturity, this is the technology that lets Nvidia and AMD stack chips like Lego bricks. So with all that good news, TSMC stock opened down more than 3.5% on July 17th. Why? Because according to senior analyst Hon Hai, the volume shrinkage you're seeing is driven by foreign investors turning conservative. He says electronic subsectors like passive components, IC substrates, power components, and CPO are all rotating lower, creating overhead resistance for the whole market. Let's connect this to names you actually track. When Hon Hai, that's Foxconn in the US, trades below flat, and MediaTek falls over 4.5%, it tells you the entire Taiwan supply chain is feeling pressure. IC substrate stocks like Kinsys, Unimicron, Zhending, and Nanya PCB all declined. Those are the companies that make the boards Nvidia's H100 and B200 chips sit on. If they're weak, it's a signal about AI hardware demand that even Nvidia can't ignore. Look at what happened overnight in the US on July 16th. The Nasdaq dropped 387 points, the S&P 500 fell, and the Philadelphia Semiconductor Index plunged 4.29%. TSMC's ADR fell 2.32%, and Nvidia dropped 2.4%. So the sell-off wasn't just a Taiwan story, it was a global tech unwind. Japan's Nikkei also fell more than 3.55% in early trade, while South Korea was closed for Constitution Day. Now here's what the smart money is doing, according to Taiwan's own data. On July 16th, foreign investors sold 48.3 billion new Taiwan dollars in cash equities. That's about $1.5 billion out the door in one day. Investment trusts bought 8.5 billion new Taiwan dollars, but proprietary dealers sold another 3.4 billion new Taiwan dollars. So net-net the three major institutions sold 43.1 billion new Taiwan dollars. In the futures market, foreign net short positions increased by 3,207 contracts, bringing open interest net short to 84,453 contracts. That's a massive bearish bet by international capital. CSC, one of Taiwan's leading brokerages, says TSMC's revenue and outlook beat expectations. But short-term gross margin is pressured by new capacity coming online. They're also worried about component shortages, the sustainability of AI spending by cloud service providers, and US-Iran geopolitics impacting oil and bond yields. Their advice: maintain cash flexibility, avoid leverage, and focus on liquid large-cap AI stocks. Their long-term watch list includes TSMC and advanced process packaging, high-speed transmission including optical, IC substrates and PCBs, chassis slides, power semiconductors, specialty chemicals, and even bicycles. Yes, bicycles, because Taiwan isn't just chips, it's the world's high-end bike manufacturing hub too. So what does this all mean for you as an investor? The sell-off isn't a TSMC problem, it's a global risk-off moment hitting the most expensive part of the market first. Analysts expect the market to consolidate in a high range, not collapse. And if you're holding Nvidia, AMD, Apple, or Tesla, remember, their most advanced chips run through Taiwan. When Taiwan's market takes a hit, it's worth asking whether the selling is rational or just noise. According to Taiwan's analysts, the long-term story, AI, advanced packaging, US fab expansion, hasn't changed. So keep watching the 120-day moving average, keep an eye on those foreign futures shorts. And know that Taiwan's supply chain will tell you the truth before Wall Street even admits there's a question.